What's up, traders, and welcome to the first installment of Weekly Levels. This is going to be for January the 16th, 2022. Every weekend, I sit down and I look at the instruments that I'm going to trade in the week ahead for levels of support and resistance. So what I'm going to do is I'm going to share that research with you all so that you can be looking at these levels I think are going to be critical for these instruments, as well as perhaps learn some of the techniques that I use to find trading opportunities. So the first thing we're going to look at is the stock market, and then we're going to look into crypto and individual instruments as well. Let's start by looking at the S&P 500 index futures. I like the futures for really assessing what the stock market is doing. They're the most liquid products after all. And what we see here is a very bullish trend. We all know that. We all know the stock market is going up. And last week was critical for both the S&P 500 and the Nasdaq, because if you see here, the all-time high all the way back to this low right here, it creates our Kijinsen right here, but also the most recent low, which we made in the middle of December. This week actually closed to hold that level. You can see this even more on the Nasdaq futures. Right there, very volatile week, but it closed to hold the support. If we were to break it this week, I would actually begin to look at a potential bearish move to the cloud. But as long as it holds above this level, I'm going to call this trend bullish. If we look at some of the other indexes like the Russell, well, the Russell's been kind of stalling out for basically the last quarter. This is the smaller companies, not quite the large caps that are represented in the S&P 500. And of course, the Dow looks much like the rest of the indexes. I'm very keen on watching the VIX, and the VIX can often give you great timing signals for the stock market as a whole. What I mean by this is you want to look for places using a daily or a weekly VIX Ichimoku chart, which will tell you the 50% retracements of the major moves. Back when we had this last week of November, the market bottomed out at the same time that the VIX was beginning to touch this level right here. You can see it actually a little bit easier on the monthly. Basically, the key level to watch for. Now, the VIX can spike above it at certain times, but it has tended to hold below 2984. What we're really looking at now is the level on the VIX of 2186. And last week it touched it just as it did at the beginning of the year. This is not a very elevated VIX. The options market, that's what the VIX represents, the options of the SPY, it is not pricing in a crash or any real extreme volatility. VIX anywhere under 20 is considered pretty low historically. And so the key level to watch on the VIX, a daily or weekly bar holding below, would be 2186. Right now, I don't see any signs from the VIX that this is the case. Let's look at crypto now. So Bitcoin, it continues, as I've been talking about for a long time, since about the liquidation low, as I call it, on December the 3rd is when it started. We retested this low. It was almost like a force of gravity that brought us down to this level. And now we are fighting to stay above that low that it created back here on December the 4th. It has survived the challenge. The first level was to recapture this trend down, and it came up to that level and held. So now we're stuck. We're basically stuck between the liquidation low and this resistance right here. When I would consider Bitcoin to be bullish is if it actually starts to clear the cloud on the daily, not before. The same goes with Ethereum. Now, Ethereum, on the other hand, it actually broke its liquidation low and is holding below it. It is also in a bearish trend. Now, where do I think that Bitcoin is going to go? My thesis now is that price is going to continue this bearish trend. And where this could stop is the retracement from the all-time high all the way down. If we draw it to the COVID low, we get a level about 3,600. And if we simplify things, if we take off Ichimoku, I think that we could see a classic head and shoulders pattern forming where we have the left shoulder here coming up to a head at the all-time high and then finding support around the 36,000 mark. I would expect to see a rally off this level, but I would not expect it to follow through to be a classic head and shoulders. So right now, 36,000 is where I would likely see this bearish trend to stop. Some of the other more popular meme coins, the Dogecoin, well, I'm very bearish on these. I think the dog has had their day. I'm sure there are a lot of people that are very excited about it. I was actually watching this over the weekend because from the low that it made on the 10th of January up to this most recent rally, which I'm sure we could find social media talking about how this is it, this is the resurgence, but no. I watched it just in case. We came to the retracement level. We showed some potential support of it right here, but now we're breaking below it. So I do believe that this rally is over. And the other dog that's had its day, its rally is holding so far, but broadly speaking, I'm still bearish on Shiba and looking for it to come down to here. Some of the others that I found interesting, Monero, which I really like the use case. It's holding its ground on the weekly, but of course on the daily. It was trending bearish. It's now turned into a neutral sentiment. So while Bitcoin and Ethereum are actually continuing to trend bearish, I find it interesting that Monero has actually come back into the cloud to give us more of a neutral sentiment. Some of the meta tokens that I've been watching, I think it's key to look at these on the daily. Sand is actually holding its retracement level. So as long as it holds in this range here, and so far it is about the 4.5, I would not consider that bearish just yet. Whereas Mana, it is actually started to break down and trend to the bearish side. Let's look at some other things. Let's go back and look at currencies, or first we'll look at bonds. So bonds values are going down. Bond values are going down because it is implied that this year interest rates are going to go up. But really and truly, from a basic technical analysis perspective, we're just approaching a bottom that we reached in March of 2021. In the broader perspective, it may be trending bearish, but it's coming up against what could be a support here. So I would not be necessarily shorting bonds unless we get a break to the downside. Bonds are, of course, going to be related to the dollar. We're going to use a DXY to look at that. So what is the dollar doing? A lot of people think that the dollar is being hyperinflated by the Fed, yada, yada, yada. Well, the last couple of months, the trend has actually been up. In fact, it's actually started to trend to the bullish side and on the daily here, while it's holding at a resistance that is basically the midpoint of this decade range. That's where we're sitting right now. The dollar has stalled out for the last few months at this resistance level. So while the weekly is trying to trend bullish, it's getting stalled out here. But so far, I'm still pretty bullish on the daily. We have not gotten to the full bear side. So the dollar is actually still looking pretty bullish. Some individual stocks that I want to look at. I think Apple, which pretty much drives the entire index markets. I have this level marked off right here, 182.86. It's a very, very interesting level. And the reason is because that is the $3 trillion market cap. It's so interesting when things like that happen. Basically, if you go back to the beginning of the year, the first trading day of the year, it pegged it And then on the second day of the year, it hit it again. And that psychological level of the $3 trillion market cap was quite the resistance. What I'm looking at here, again, Apple is still bullish, but it could be going through a pullback. I would not be surprised if we saw it come back and try to retest the cloud in here. Another big winner from last year, see how it's holding on, is NVIDIA. NVIDIA is holding its ground, but it's starting to get a little dicey. If we do see a movement to break the low that it made last week on January the 10th, if we get back down into the 250 range, this could indicate a bearish trend and it could give up some of its gains. To get these gains in tech stocks, you got to pay for it sometime. They don't go up forever, and the gains come from volatility, which is a double-edged sword. Another tech stock to look at that people always want to talk about is Tesla. Some folks asked me on my live stream last week if Tesla was forming a head and shoulders. I'm going to say that's a no, because as we looked at in Bitcoin, you need a head. And really what I see here, without trying to do any fancy additional charting, is a consolidation pattern. This held the retracement level of the last year's move when it got down to basically 900, right about here. And as long as it holds this level here, I'm going to say that this is holding its ground, but it's definitely slowed down. Got a little bit of excitement at the beginning of the year when it came up, but it was really just holding these highs. Now it's caught in a range. It's hard to say, but I know where this thing will start to go bearish. So far, not there yet. Big winner this week and for the last few weeks has been ExxonMobil. ExxonMobil just continues to trend up along with oil. Yeah, it's very funny to think that 2 years ago, it's been 2 years now, April of 2020, oil went negative, at least on the futures market. And one of the, I wouldn't say easiest trades in the world, but one of the more obvious in hindsight, as everything is, was to go long oil, because oil is energy. And energy, nowhere in nature is it free. I think a lot of people have forgotten, or they just weren't trading at the time, that the range that most people assumed oil should be is about $100 a barrel, which is where it stood for many years, basically almost half a decade in the early part of the 2000 teens. And that would be likely, if this bullish trend continues, where we could end up back at the $100 barrel, which is going to be bullish for a lot of the energy stocks that are running right now. So I don't think these have topped out yet. They're trending. It's probably a little late to jump into them, but that seems to be the theme going into 2022. We can look at a lot of these themes as far as sectors go by looking at ETFs. And of course, XLE is going to represent these energy stocks. The point to get in was, of course, would have been good in December. That was the pullback right there to get into energy stocks. One thing that I'm actually got my eye on now is the healthcare. Now, for those that weren't paying attention to specific stocks, I believe it was Humana had a massive write down on one of their products, which was about a 20% decline from here to here. Yeah, that's pretty much a disaster, and it brought down the healthcare industry. So healthcare is going through a major pullback right now, but just like every other sector, still pretty bullish. Another winner for going into the year is consumer staples. The one I like and the one I own for this has, of course, been Procter & Gamble. A little fall off in the last week, but a lot of people being nervous, as everyone seems to be at the beginning of a year, are going into value. A lot of these names that people need, toilet paper, basically, Procter & Gamble. And so that seems to be the theme. Well, we'll see how that plays out as the year goes along. Financials holding pretty strong as well. And tech, XLK, it's still holding its ground. Not quite bearish yet, but it's probably the most neutral over the long run of all of the sectors. So that's going to do it for this weekend. As you know, the market is closed on the 17th of January in observance of Martin Luther King Jr. Day. So will not be trading myself, but we'll have a short week, and it's going to be interesting just like every week. So hope to see you again in the next video. Trade wisely.